Good morning, traders, and welcome to the Bookmap live trading webinar. This is Bruce at Bookmap. Today we have Jtrader, a stocks trader. He'll start in just a little bit. Bookmap live trading webinar. This is Bruce at. He's always a little late. He's finishing up his trading room. He does offer mentorship and trading services. There's links here that I'll put into the chat for you. He does this webinar with us every Wednesday, he'll take live positions in here. This is great. This is all a part of our education. We have the educational course. It's online. Learn about order flow via the educational course. Then we have these live webinars here, and like yesterday and Monday, that we go through and understand how to apply that education in the live market. It's live forward-looking analysis. We'll read the market and give insight to where we think price is going to move next. Then we have live trading with Jtrader and Scott Pulcini tomorrow, a futures trader. So you can also learn from other traders how they're actually taking positions. Okay, so we offer very complete education here, we think. General disclosure, let's go through these. It's important to understand what you're getting involved with here. This is only for educational purposes. Okay, just listen to the disclosure here, please. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so let's jump in. Let's take a look here at the S&P and see what's going on. All right, so let's see here. We had some pretty good webinars last couple of days going through all sorts of interesting order flow phenomena, and that's what Bookmap is really good at visualizing. And you know, it's funny, we had an event yesterday in the afternoon. I had an event with one of our partner educators over at Pirate Traders, Charles, and there was a question asked about order flow software and saying that it is kind of trying to like trick traders into going long or dumping a position or something along those lines. And at first my reaction was kind of negative, like, are you joking? And then I understood the question better afterwards. And the question was about like the orders in here, what larger players are doing, or very sophisticated players like this right here, showing very high liquidity right here, but they never took a position, right? So this is kind of like a potential spoof, right, to get price to come up and maybe fill them up here at 52, right? But what Bookmap is showing in here, we're showing everything. We're showing the limit order book both for the current market and the historical market. So we captured that order book information here. And yeah, this is maybe a trick, right? But all we're doing is visualizing it. So I just want to get this point across. There's nothing we're trying to dupe in here, or trying to say anything differently here. That it's just more information. Now in this case, we're understanding the game, and we're talking about game theory in here. This is it. It's right in front of us. This is the game. Throw in a very, very high liquidity, come in with high volume on the bid, and you can change price levels, get it to come up into these areas here, right? So that would be kind of like akin to spoofing. Once you start to understand the game, now you know the game, and you don't have to be tricked by it, right? So we're just visualizing it. There's nothing. It's just, this is all very, very factual data here, and that's it. It's important to cover this. It was that question really kind of threw me for a little bit of a loop later, and I wanted to understand it more thoroughly. So we're just visualizing the market data. And what we're able, since it's visualized, it's kind of like their footprint is captured here. This is what they're doing. Maybe to get more of their short on, or maybe take some profits or something like that. I don't know. But what we can see, though, is for sure they came in with high liquidity here, and there was a reaction for price to go higher. Right? That's what we want to understand. Now, we can put this into context in the bigger picture here. And Charles was saying, and I agreed with him on this, was that yeah, we may see this and that, and larger players and gaming the market and all sorts of little things. Yesterday was a great example. We saw all sorts of things going on in the market around 3,800. Very, very important price level. But what we were able to do is put that into context and start to understand the game that was happening and unfolding. So now we're aware of it and we're visualizing it. We have the information in front of us to act upon it or go with it or whatever it is that you want to do. The important point here is just objective data that we're visualizing here, and that's the starting point for starting to uncover what's going on. Like right in here, this is an algo right in here. Okay, now did they want to get filled in here? Not really. So this would be an ignition algo here, an example. Okay, now they did get kind of filled in here a little bit, right? But what this algo did here, let me just show you a little bit better. What this algo did is it came in here. It's showing a lot of supply or more supply here, and then it chased after the market, showing more supply. Okay, what did the market do? Well, it actually showing more supply kind of skewed the auction here, the auction process, and price was already going down. But this is like a big push behind, like wind, like pushing you and pushing behind to get it to go down into this area here and get filled down here into this liquidity. Okay, now I'm speculating. I don't, that could be the game here, right? And if so, pretty successful, and it's still working out here, right? So anyway, there's nothing nefarious here. It's just being able to understand the game at a deeper level. All right, and these kinds of charts here can do it in Bookmap. That's why, like, the charting platforms have changed quite a bit in recent years, and what we're showing in here is a lot more information that's actionable. Right? So, for example, we went through this example of showing a candlestick chart in here. Okay, and let's suppose let's see, is this a 5-minute candlestick chart? All right, great. So 10 o'clock, we see the move down into high liquidity down here. The candlestick chart, what is it telling us? Well, trend and continuation basically at this point, like large candle, another large candle, lower low here. All right, so for this to be upended in the candlestick chart, basically what we'd be looking for is a close on the buy side up here, right above the swing here, right? And we're starting to get that now, but it hasn't closed yet. We've got a ways to go for the close. So maybe we're going to get a little bit of back and forth in here before we see something like that. And if we do, well, then it's looking for retracement values. And then where is the candlestick? Well, the candlestick is not really showing us much. This is where it dropped from over here, but here's where the candle, it opened and started here, right? So you'd be looking at maybe a retracement back up into these levels, or maybe it turns into a reversal, right? Now, see the visualization here, the candlestick chart's not showing you much though, right? We're showing you every little swing, all the volume within these swings, all the liquidity. Did it trade, etc.? It did in these areas here, and then over here. Okay, it did in here, here, and here. And we saw that algo activity trying to push it more into this 45 level here. Okay. Now look at your candlestick chart. All right. Well, it's selling off up here, right? So there's you know, if you're still bearish, well then this is and you're looking for a range bound trade, and you're a candlestick trader, you wouldn't be looking at the volume in here, but you would likely be selling this up here at the top of the range. Okay, but what about you know, what about getting run over? What if you're wrong? Okay, well, let's look at more data in here, more information that'll give a higher probability to that range bound trade. Okay, well, now we're starting to see sellers come down. All right, up here though, boy, I wouldn't be selling it. I'd be looking for a little more confirmation in here, and then sellers like around here. And let's see if we get enough sellers right now. And then I would look for the move down to 48 and 45. Okay, because up here I just don't know. I see some selling in here. It's about it. Okay, I just don't know if buyers are going to spike all of a sudden really high here. Okay, so here you go. Here's your range bound activity, right? And you know, you're making a higher probability trade. You're giving up some, but you're making a higher probability decision here by starting to understand the order flow and the possible move down into these levels here. Okay, this is a very simple example, right, of understanding order flow and Bookmap here, what it's showing you compared to traditional charting. All right, so there's your beautiful range bound trade, and take some partial profit at the bottom of the range. There you go, 45 just traded. All right, and you can hold it for a bigger move. Okay, so that was you know, like a from here 50 down to 45. That's a 5-point move in the S&P right there. Okay, based on the order flow with the candles. All right, so in the candle and the candlestick pattern in here, the trade decision would be not within this area here. I mean, boy, if you want to take a guess at it, and you know, it's up to you, your trading style. It's not a bad idea. Just make sure that you've got some data behind it or some numbers behind it, that this is how you trade and that this is what you're looking for. And then in here, maybe you even add to it. You know what I mean? So you could, up here, you could take maybe partial position, and then here, this is where you go in. And now you're looking for, you know, down in here, taking partial profit and then holding. Okay, so many ways to slice and dice it. But what I'm talking about here in Bookmap and being able to apply the visualization or this understanding and knowledge is right in here. Okay, with the dots and with the volume. And we got into nuances in here about understanding all sorts of other things in here that maybe an algo trying to press price down into these levels here. Okay, that ignition algo trying to ignite maybe stops down below in these areas, etc. All right, so guys, I'm off to kind of a diatribe just to begin with here, and let me get to some of the questions in here. All right, Jtrader's in. He'll be coming in just a second here. And it looks like I'm all set in questions about crypto trader. You guys are the best trader education on YouTube. Mahalo, crypto trader or surfer. Yeah, thank you. I mean, I think we are offering something different. That's for sure. And it's because the software is offering something different. You know, visualizing the market in a very different way. But you know, here you go. I mean, this is a good example of how you may, you know, consider getting a higher probability trade based on the data in Bookmap. Whereas if you don't have that, this is what it looks like here. Okay, hold on a minute. Let me get rid of the drawings. Okay, if you don't have this information, this is what you're looking at. You don't even have best bid and offer. How do you know? How do you know if there's buyers or sellers up here? Right? You just don't. And then, okay, we made a decision right around here based on the data within this little area in here on the wick. And that gave us some good insight that we were likely to come back down lower and trade into 45. All right, and then you'd still be holding some for the continuation of the trend in the bigger picture. All right, so now that's really getting into it here and becoming more sure about your trade decision. And that's what this software is here for, is to help you build confidence by offering more insight to what's going on there. And like I said, it's just data here. And that's what a lot of traders really enjoy about Bookmap, is we're just showing you the data. And then the interpretation of the data comes from our education. So we have all sorts of traders lined up here. So we have the educational course that's online. It's on our YouTube channel. And then we have the live analysis webinars similar to what we're just doing right now that we do Monday, Tuesday, and Friday. And then we have Jtrader, live trading with a Jtrader for stocks. He'll be in just a second. And then we have tomorrow Scott Bolsini for futures. Right, so we can that's the education that we're offering here. We have Tom B in the right after this webinar. He's away this week. He will be back on Friday at 11:30. He'll go through volume profile and order flow. All right, and then we have Rain, who does crypto markets in the morning at 8:30 East Coast time, and we have all sorts of other events with other traders. That's the, and we have our Discord channel. On our Discord channel, we have all sorts of events and community. Offering this this education and this support to gain understanding and deeper insight from others and networking, so that you guys can really apply this and make better trades. Okay, enough on all of that. Let's Jtrader should be in just a second here. Now look at this. Look at this. Out of the blue, right? Out of the blue. Just tons of buying coming in. All right, so either something happened or a larger player. All right, so let's see if they can. We already got a pullback here. All right, well, let's see if we can get a little bit more up here. And I'd be looking for it to retrace back up into, well, it's already done its retracement here. Right, let's see if we can get up a little higher here at 48, maybe even 50, back up to 50 here. It's a lot of buying. All right, so let's see if we can get a continuation. Now what we're looking for in the order flow here, okay, and you don't have to target 50, target the top of the candle here. Right, this would be more of your range bound trade yet again. Here we're looking for this. See that in the bid, on the bid here, 44, they're showing a little bit of size there. Okay. All right, well, it attracted some sellers. Now, let's see if we can get back up here at 45. Nothing. Okay, I'm looking for 45, 45.50. I'm looking for buyers here. Okay, if I get it, I would write it back up and I would take maybe some partial profit up here. If I'm a candlestick trader, I'd be taking my partial profit up here. Maybe a little bit higher. There they are. I'd be in. I'd be looking for the move higher. All right, now, let's just zoom out. Okay, so that's not a bad area. It's in line with this swing here. Okay, you already took some partial profit. Okay, and you're still holding. Okay, maybe it's going. The next one is 50 here, and that's an important level. It's the half figure. So it's up to you if you want to get out, if you want to hold it, if you're looking for a move above it, whatever. That's the data is here. The liquidity is here in the market, and that would be another area to consider. All right, so there's a couple of trade ideas. Now these are not trade recommendations. Okay, it's just showing you the order flow and then applying this within a candlestick chart trading strategy, right? Taking a little bit here and there. Now it doesn't have to be on these low time frames as well. You can look at higher time. Your higher time frame, you're still short basically, there's nothing in here on the higher time frame to tell you that you want to go long. All right, so all sorts of ways, again, to slice and dice it by looking at different time frames and the data set within those time frames. Let's see, Paris, you have a question. Before you start the trading day of trading, are you looking at historical? Yes, I am. At levels, and I hate to kind of call them support and resistance, but levels of activity where big events took place is more what I'm looking for. Okay, order flow events. Joseph, I hear
Good
you.
morning, Bruce.
How are you?
Good, buddy.
Are you
Woke
in
up at 4 o'clock, but
Las Vegas time though, right?
Denver time. I got back
Ah,
over here to Denver.
okay. So yeah, let me take my mug off of the video here, and let's if you can share your screen and we'll get going.
Let me know if you can see my screen.
Okay. Yes.
Can
And
you see it, Bruce?
yes, and let me pop it out. Okay. And hold on just a minute. There we go. You're all set.
All right. So, good morning, traders. Uh, Beautiful day this morning. We traded something like 6 tickers. I will share what we did, but mostly we'll go to live price action analysis and trading over here. So I'm back from Trader for Cause, where I spoke about the trading discipline, self-control, ways to control your risk management and control yourself in trading. And today I would say was a perfect example. So this over here, I wanted to start sharing KITT, which is this bookmap over here. So this is one of the trade execution from a member. I just want to share a few things. The risk management is not important over here. If he made money or whatever, actually traded very, very good because he's short over here and still holding. But the point is that this was a short on a rejection, and we shorted this. I alerted this trade exactly in the moment. This morning was simply perfect. We traded 7 tickers and 7 wins we had. So I would say a great morning. This was the play. Okay, so when we had this first push out of the gate, this level over here near the pre-market high, on the fill, we shorted. So exactly when we started seeing this over here, my alert was over here 577. So I alerted exactly this point because you can see that going straight up, big heat map over here. Seller came in, very tight risk. So we had like 4 cents risk for something like about 20R. Before this, you can see the trader was very over here patient. And then over here, what he did, he was looking for an unwind. Didn't happen, trailing the money. So that's the risk management I'm talking about. Okay, so this is a perfect read. This was Chris, so perfect read over here. And I think it's very important to understand price action over here being absorbed. These levels over here, you can see big heat map in the 5, double bottom, more heat pump over here. So buyers pushing back up. And then over here, he basically stopped in the money, right? So stopped in the money. Over here, there was a halt. So if you can see, traders, this was the moment of halt, 590. Look what it did. This was simply amazing because it's called one of the setup that I love. Bruce knows it. I trade a V pattern to the downside and to the upside. So over here, pushed V pattern, came down. And over here, look what the trader did. So short over here. Now, still has to update the chart, but basically short up there, have the halt, and from that moment you can see what the stock did. So he short up here, and now he's up like 1.50 bucks per share. Okay, so we're talking about a $6 stock, right? So he took all this, but this was the setup that also over here, this was a very, very good trade. We can see, I think, an update over here. You can see the same pattern from another trader. This was Mary. So shorting over here exactly again on that pop, covering this case and in the money as well. You see the risk management is perfect because when you short it, then you have to risk over here in the money. A lot of traders, Bruce, I see that they stuck to their plan. And it's good to stuck to your plan, but then when the market reverses and you have to change bias, you also have to change your plan or to use the risk management. I was talking yesterday with a trader. He's very talented. I believe that he's now listening to me because I said we are going to cover a few interesting things today. And he has like 90% win rate on the entries. So he would say, he's a billionaire by this time. But no, the point is that when he is in a trade and the trade goes, in the money, he doesn't take profit, or he waits, for example, in the short to have all the unwind. The unwind doesn't happen. We have, for example, the reversal. He's stuck, to that P&L. He's stuck with the idea that the stock has too short to unwind, and he ends up like losing the trade. So it's about really self-control and even putting a trailing stop with, I would say, your broker. And then over here again, you can see the trader, the halt, trading that pop and fail. So beautiful unwind. So amazing, I would say, work for the morning. This is another trader, traded that halt over here, exactly where we explained this later. So KITT was beautiful. We had HUSA as well. Trader short, so a lot of stuff. Risk management is the key. Today was the key over here on Peggy. And I want to share with Peggy what we did. So we can put this Peggy up. So Peggy is a small cap, small float, no news today. It's just pushing up. And we shorted two times with a very tight risk, small win, and then actually not small win because we had some literally, I would say, good size over here, but then trailing in the money. So this was the main short we took, 950. So over here, gonna put this back up. Yeah, 950. All right. So when you see this level over here, this 250 trader, this was a pretty good liquidity, and it was the $half number, this level that you see the line over here. So what I said was very clear. I said, let's look, and everything that I'm telling you was recorded. I screen shared. So, just like very precise work we did today. I was saying, let's look for that 250 breakup because often what happens, we have these $half numbers, okay? They work as a main catalyst. So over here, I was just saying, Peggy, before that pop, only for 250 fake out or nothing. And the point over here is that a few minutes later, we had a pop. Okay, I alerted at 951 over here. It came 250, push, right away, came down. That's a short, 248. And then you can see we had some liquidity. We broke that support, held over here, dipped to 235. So we took a main cover, just like those 12, 13 cents. And then in the money, and then you can see the push over here to the upside. And from this moment, I said, okay, now we only look for long, no short anymore, because you can see high volume came over here. From this 250 breakout, you can see the high volume, high volume, high volume. A little bit of sellers over here, so we'll be looking at Jalen's. We have like a dip purchase or nothing. Also had this morning HUSA. Oh, this was a 70 cents failure. Over here, I said short HUSA 465, 935 alerted, like I was alerting Peggy, and a KITT. So we had HUSA. Bookmap was again my timing for the entry. As you can see, the high liquidity over here stack at 470, right? So once the price went over here, I was looking HUSA for a short, gap and extension play, low volume push, all right, low volume push. The short that we took was exactly over here, 475 alerted, and then main unwind over here. We had the call target at 4, the main target for the day. You can see from that pattern, on this push 465, we took almost a top tick, boom, all the way down to 4. So beautiful 70 cents, almost 7 cents fader on this one. Now, what I'm looking right now, KITT for more unwind. We're gonna cover also what we did on Apple. We had also Tesla movers today. We have INDO. So a lot of plays over here. So let's start looking one by one, if we can have some plays. So we're gonna put HUSA, which is a stock that we are still in. We're gonna look at KITT, which is already under. We're gonna look at PEGI, INDO. We had also over here Tesla. And yes, you can see Tesla has same faders. Tesla was a perfect J-line rejection. So now we're going to look for these plays over here. If you have question traders, everything that I'm telling you this morning we traded, I basically recorded at my screen, the alerts, my voice commentary, timestamp. So we had 7 wins and 2 scratches. So almost a 100% win rate morning. And for the month, we're running with 80% win rate, 79% for September. So I'm going to start over here with, as we said, PEGI. So you can see PEGI just doing one thing, bouncing with the 1 minute in. So it didn't take long over here this morning. As I said, we showed over here this 248 for a win. We also showed over here at 242 for 230 first target, then I'll break even. So we showed it these 2 times over here when we saw that, okay, it was 10 o'clock, we were holding open level. Okay, bye-bye, we're not looking anymore to short this. So we're gonna look for PEGI, if we can have a dip over here and long, all right? We're gonna shift to 1 minute chart. There we are. So let's look together at the 250, 248 area. Too early over here. I see some buyers stack 262 and 267, but too early to take a long. So we have to wait our level. I think the best trade that I saw this morning on PEGI was definitely this. Definitely was this stock. Long over here for our trader, stop and then long over here using VWAP and J lines, and selling into this push. I think this is the best long of the day. For short sellers, I can say a lot of good risk management. Short stop, short in the money, short in the money, short stop over here. So every single time this is a short seller, but you can see that he basically didn't fight over here the trend. He stopped out every single time, and the same thing over here. So short pops, cover dips, pop dips, pop dips. So even here, not marrying the long side, another short seller over here, but still very good execution, like precise timing on this. This is not easy, so not everybody can trade like this, but it's good way to share also with you the risk management. So yes, just simply fader, main support over here, 3730. Tesla main fader, both J-line rejection. You can see over here. J-line rejection at this point, 9:30. J-line rejection over here around 10 o'clock. Let's see KITT. In the meantime, is going to, there we are, KITT is going to the 1 minute J lines. So let's look for a possible over here. What I'm looking, KITT for a J line rejection to re-add. We have a parabolic move, Bruce. So we'll look at FNGR. So this is a stock that is basically was in play 2 days ago. Level support squeeze halted over here. This will be pretty interesting. So let's put also FNGR. And let's also use over here two grains. So what we're looking is a level over here that I had from yesterday, resistance 850. And then we're looking at this 10 for ideally a short. This is a trader over here that is in the room. Good long on the dips over here. So great job on this long. So now we're very extended from the J-lines from the 90 MA. So not looking really too long up here. Mostly looking for a reversal short. And for so part of the room that is still short on HUSA INDO, just hold it. Cover the main parts, but hold it. So here, KITT moving. We're looking to recycle short on KITT. Waiting for J lines rejection or VWAP rejection on KITT to recycle. Short, okay. So we're already short from the top on this. Who just came over here on screen share? We're short from this 620 area with Bookmap. So now over here, KITT going into the VWAP, going also to that fib lever 550. So let's look over here. So this 537, that's a level too short for us. That 537 over here, that's perfect short on KITT, risking 540. All right. So that 537 area, too short KITT, risking 540. So we're shorting over here what J lines and VWAP with a very tight risk. Exactly. That's 537 over there. That's your short. That 537, risking 540. So we're looking for 3 cents risk and at least 3 hour return. Open also over here FNGR. See, when it breaks at 540 over here, that's exactly your stop. We're still looking for another trade. Now we're looking at 560. Okay, ITT is still pushing, 568, so let it go right now, high volume. At this point, what I'm looking over here, only for or a fill of VWAP and rejection, or for this high at 610. So these setups that they like to squeeze mid-morning, I will look to reshort them, not really to long them. 3/4 of them on KITT, when we have this mid-morning push, they tend then to fail. More push over here on FNGR. So we're waiting FNGR for now that 850 or 9. Or an eventual stuff over here. KITT, we're waiting at this point for or the level of 580 or for the level of 6 plus. So we're looking at intraday levels. Peggy, in the meanwhile, remember we're looking for J-Lines dip. We missed this. So perfect J-Lines dip. You can see the dip and right away push up 15 cents from there. Was just alerting a few minutes ago, Peggy. We're going to look for 1 minute J-Lines long. Possible wash over here coming on KITT.
Joseph, regarding that a pretty interesting story, like or one of your followers there, or 90% win rate. Yet, he's still losing money
Yeah,
overall.
exactly.
So, and I know you said like, well, stick to your stops, or but how does one like kind of start to build confidence and move forward from that scenario?
There's a lot of work to do when you have like this kind of, let's say, problem to fix. In this case, is risk management and discipline. So he knows how to use risk management. Is the point that he cannot apply it, or not always. So this requires a step back and work on himself. This is the first thing to do, and this means journaling, looking at that he's doing exercises. This is what I do, for example, in mentoring when I follow a one-on-one trader. Having a daily mentor that evaluates your trading, that you have to be accountable to him, that you have to have a report with him. It makes you improve step by step, day by day. Of
Mm.
course, he's coming to me now because he has this problem to fix. It's not that, the day after it's going to be fixed. But having a clear routine and precise rules and goals to achieve every day. And these goals have to be, I would say affordable in the sense that every single day you have to have a goal that it's just like, a little bit more than yesterday, maybe at 0.5%, at 1%. If now I tell you, Bruce, like change exactly, totally your diet, like from tomorrow you change your diet, you're gonna go like probably, gonna get like overwhelmed, you're gonna get like stressed, and probably you're not gonna last. But if I tell you tomorrow, change one meal, have one good meal tomorrow, and then after 4 or 5 days, take a second meal good, and then after 4 or 5 days or 1 week or 2 weeks, a third meal. You're basically going to change your diet, your lifestyle. You're going to find discipline. You're going to find routine to follow that. You're going to like it because you're going to do step by step. So that's not going to be harsh on yourself. Because remember that as human beings, and this is what I was talking, for example, Trader for Cause, we don't accept to be wrong. You don't accept to want to change something because our mind is not going to respond to something we don't like. I always look for the easy way. Meanwhile, over here, that's the setup, KITT, perfect stuff that I need to show 1 second, traders. This is exactly what I'm looking for. You see the big push over here to this heat map, right? And that's my fake out. That's the level to short over here, 555. So perfect setup over here on KITT. So our mind, as I was saying, is not like, doesn't have an imprinting to do the correct things, but always finds the easy way. Stop short, okay. So in this case, he's working on himself, working with a mentor, and like every single athlete out there has a coach. Okay, when you become a 6, 7 figure trader, then you have to have a coach, and you have to work with them in order to, I would say, overcome these difficulties. And what I can tell you, Bruce, is that in the last, I would say, decade, all those traders that I mentored, majority of them, it was not too much about the setups or the price action or to learn the order flow. It was more about the discipline they had or this they had. Because, for example, you as a trader, you can be disciplined 8, 9 days out of 10. Maybe have a good streak, maybe even like like 1 month all green, and then one day you're basically not feeling that perfect. Boom, you're gonna have like your worst loss for the last 6 months or 1 year. And this is something that is normal because we're humans. We do errors. That's the reason why you need somebody always looking at your plan, your work, telling you what to do, where to put the stops, how to fix them, and this. So this is basically the what I would tell you as answer for this. The other thing is working yourself means starting from a routine. So you said before how to get confident, how to get that consistency. You start basically from the routine in the morning when you wake up. You have to have everything planned, feeling good. So you have to do something also that you release stress night before. If you wake up early like me this morning, up 4 o'clock over here in Colorado, or after work, release. It could be like from jumping the rope to staying with your kids to going horse riding to eat something that makes it good. But basically, we need to release stress or endorphins, okay? And then all of this releases a lot of serotonin that makes us feel good, more patient, feeling better, not overstressed.
But I mean, there's one thing, and I've kind of brought this point up many times over. Um, and you're talking about people can understand setups and trades and whatever, uh, or order flow, or whatever. Yeah, sure. I get that. People understand that stuff pretty quickly. However, uh, the next step is to understand if you know do they have an edge,
Mm-hmm.
because like yeah, okay, now I need a management this and that and whatever, but like you still don't know that every time you take a trade, do I have an edge? And
Mm-hmm.
then because you don't know if you have an edge or not, you become undisciplined with your trade management because you don't know.
Absolutely.
So I'm just wondering, like, because there's a big distinction there between the two. So this one trader who's hitting 90%, does he actually have an edge there? Like he knows exactly what he's doing. And then if he does, then of course it comes down to trade management. But can you demonstrate an edge? If you're hitting 90% or 99%, whatever it is, very very high percentage of winners, is it for like 5 cents? And then every time you have a loss, it's like 50 cents. So
Exactly. No, I would say that in his case, he has an edge, so he has a good risk reward ratio, but it's just like that mentality of want to get too much too soon. So traded with a small account, um, and don't get me wrong, it's good to look always to make money, but if you focus only to make money, to build your capital very fast, you're not focusing really on the main theme, which is instead trading good. If you're gonna trade with a professional never thinks about the money. Professional thinks about like trading good, executing the plan. So if you start doing that, then everything will be in place. And executing a plan means consider the entry, but also the exit.
so
So a lot of traders that I see, they only focus too much on the entry, but they don't focus, for example, on the exit.
mm,
And that is really where you make your R return. For me, the entry is not that important. I mean, the timing, of course, is important. I like to enter at a good moment, but it's much more important for me where I take profit and where I put my stops and where I put my trailing stops. That makes a difference because I can enter even, at not perfect, like, many other traders that maybe they are more like skilled with timing than me. But then if I have, the good plan, the good strategy, my setup are working, this is good in this market. And, the testimony of this is all my members who are making money. Then I have a good exit way. All right, that is how I make my return.
so then in this case, he knows he has an edge. He's hitting 90% win rates, um, but he's not following his plan.
Exactly, exactly. Or we will say he follows it impartial, like only for the entry and everything because I see all his entries and I start like to look at over his job in the last 10 days, and his entries are like spot on. It's just
Mm,
like the management, the risk under control. That's what he has to face.
okay. And that's where it's a slippery slope because like sometimes you manage the trade and when it goes against you, let's say 25 or 50 cents, uh, and then it comes back, and you had a winner, and you're like, oh, okay, well, all I have to do is then wait a little longer, and I get another winner. But it's that one time when it goes $1.50 against you, and now it's wiped you out.
Exactly, exactly, exactly. And always start like that. I risk a little bit more, risk a little bit more, and in about maybe half a day, you're down like huge.
But
So
that's an interesting point though, because and I'm just bringing this up because I hope it's helpful for everybody. Uh, if you have some of these issues, for example, you're not actually hitting 90% if you're following your plan. So you got to take that number into consideration. It's actually not 90%. If you manage it the way you're supposed to manage it might be 75% or 60%. Because
Exactly,
that time you get a win, it went against you and you still held it, but you got a win out of it, and that skews your percentage.
exactly. Bruce, I met during this day a trader. He lost seven figures in one trade. Of course, his account was big, but he lost like 70% of his account in one trade. Okay, so imagine how did he feel the day. And the point he told me that he was like doing good. This is a trader that 2020 made 3 millions. 2021 made I think like 2 million and something. To this date, like happened like 1.5 months ago. He was doing good, like 1.4 million. He lost like 1 million and something in one trade. And I told him, but he have problem with risk management. We're talking like this. And we were at dinner together. He stopped like eating when we started like talking about this. Um, and it was me, him, and my wife. And he told me, Jay, you know what? I traded good like, for the last 3 years. I would say I risk manage about 80, 90% always correct. Like using his stops. He doesn't use like hard stop losses. And I think that's, always the main point. He had mental stop losses always. And I see a lot of professional traders generally don't have hard stop losses because they think always, to be that precise, to know what they know what to do. The point is that one day they didn't use a stop loss, but it's not that. He said, I'm going to risk a little bit more. I'm going to risk a little bit more. I'm going to risk a little bit more. And then he started like, to hold this overnight. Hold overnight. This was a short on small caps. The trade continued to go, 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 and go. And eventually he was, like down almost all account. He had to close it, you know, margin call or whatever. And this happened for one time that he said, okay, I'm gonna give a little bit more risk. So when he was like told me around minus 80K for his trade, and then he said, I'm gonna give a little more risk, like 100. Then it went 130, then it went like 200, and then so on. That is how he basically worked for 9 months. And this happened to me as well in the past. Working for 9 months. In 9 months, what happened? Boom. It's like, this job, if you don't work and you bring home the money, if you don't cash out, it's not like in a normal job that you simply have your paycheck every single week or 2 weeks or a month, whatever that is. No, here, if you don't produce, you don't earn. In this case, it's like if 9 months he didn't work, of course. He's a professional trader. He trades for a living. He had any other money on the side. But the point is that not having for one time that risk, because one day we can be tired, one day we can be upset, one day we cannot be like totally focused on trading. Uh, and he had a main loss.
but he's not the only the one. I met a lot of traders like they did this errors like in the past, maybe even more than one. So for me, discipline is the most important thing. If you don't have that kind of discipline, always have a set risk with the broker that beyond that you cannot risk for the day. And try, even if you are like a professional trader, to have a hard stop loss. For example, let's say I long over here at this is, see the error. Just when it goes up over here to 64, to 65, that's my long by setup. Okay, you learn this very fast when you trade with me. What I do, even if I, don't use my stop loss because I have mental stop loss, put always when you enter on these stocks $2 like a 20 cents stop away from the actual price. Just like, for we're having a safety. Of course, you would stop over here if the price goes 259, 260, right? But just to have it, you enter 265 automatically, you have a stop 20 cents away. 255. Of course, you're going to trade a $7 stock. You won't have 20 cents stop, you will have like 45, 50 cents stop. Just to have like a risk. Then when you're in and you have a stop, let's say 255 over here or 245, you can drag your stop, or you can cancel stop and move it to more break even. But always have it. Makes
Yeah.
sense, Bruce,
Yeah,
what
yeah,
we spoke
yeah,
about?
yeah, yeah. Absolutely, absolutely. I mean, I think the key here um, is exactly what you are talking about with discipline. Of, well, if you have a strategy that works, you've got to follow it, and you can't fiddle around with it. And why would you? It works. So don't fiddle around with it. I mean, just for the discussion, and try to just one analogy. I mean, this is for you to take positions in here and show us about your trading and your style, Joseph. Just one thing though, quickly. Like there's a book on habits that came out years ago. I forget the name of it, but they interviewed Tony Dungy, the football coach.
Mm-hmm.
And he had a way of a kind of a different strategy of coaching, where he said, look, we don't even care if they know our playbook. We're going to be so good at executing these plays that you're not going to be able to, you might even know where the ball is going and who's going to get it and everything, but it's going to be so well done that you will not be able to defend against it.
Mm-hmm.
And it worked extremely well. And But the problem was when there were key moments in the game, and you're talking about really, some of the highest, athletic, skilled athletes
Mm-hmm.
out there. And when it came down to it, though, their training or their history was like, now the game is on the line. It's an important game. I'm not going to do that anymore. I'm going to do something different. So now they're not executing the same way. They fiddled with it. They're relying on their skills instead of their way of executing, and then that's what hurt them. They were not following the discipline. It broke down at certain points. It sounds similar here.
Yeah, yeah, I would totally agree, of course. Of course. Um, I would say it's a big battle for traders, this mental discipline. But it's something that I've seen. It's totally, you can get trained and you can get a lot better. So it's about, how much you deserve something if you want to change and improve. I remember, for example, when I was like doing Taekwondo for about 6, 7 years, and I was small. My coach, my master, is now the first one in the world, Mr. Chong So, and he was very tough to me. And what he was doing is basically, every time I was not doing a form correctly or a pose correctly, at the end of the session, he used to like make me, do maybe 100 push-ups or run for 1 mile. So what I always preach, to the traders I follow, you have to do this like a punishment. Is something also I experienced because I know that eventually your mind will say, hey, you know what? I'm tired to do this 100 push-up. I'm tired, like, to not obey rules, and you start doing things better because you know what? And our mind reacts and learns only if you, in a sense, tread them or like we say you give them a punishment. You don't like the fact that after you will run 1 mile because you're already exhausted, but you have to do it. okay, then your mind will start like adopting and force himself to do the right things. And the same way here in trading. Okay.
So if you don't learn exactly how you have to trade, having an edge, finding the correct setups, you're not gonna make it. So that's the reason why all the training behind is super important when you're doing like this. It's like if you're an athlete. Traders are like athletes. They have to perform at best. They have to be like physically and mentally in shape.
I mean, it seems like your path was, and we've talked about it before in the past. Like you were getting really tired of losing, and
Yep,
so you started to look at something very specific that worked for you, and then you just got really good at it. You knew that it worked, and then you started to develop your edge because you started to journalize it and started to track it and only trade that.
exactly. 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 Exactly.
Yeah, and then now, now you have many different strategies, but like that one strategy in particular was the data that you had on it. You now you had confidence in it. You knew that it worked if you just do these actions. So basically, at that point, you're just a machine doing the actions.
Exactly. The process of making money has to become automatic. If you think when you're trading, you're done, you're already losing. It has to become automatic. And that's really like for me a big edge. So I know my patterns, my strategy, my plays, automatic. So instantly you have to trade them. For example, we're looking at Peggy over here, and we had this Jalen, sorry, bounce over here. You even see the arrow, so it's very simple over here. I mean, this is like the ABC for me of trading. That's my spot for the long over here, exactly when I see the arrow coming in. So over here now, what it's doing is basically basing to 274. You can see over here we have 206,000 over here of buyers. That level is exactly here. That's where I can add more to my long. I know that it's 10 past. We have a high volume. We have a stock above the pre-market high. We have a stock above the J lines. We have a stock above the VWAP. J lines are for the upside. That is my add to the long, and this is so easy. This is like free money over here, and this is basically entering with the system. Yesterday we had three longs like this on three different stocks, tops, SNTI, AARC, all giving like a massive return for the long side. And this is very, very easy, Bruce. Look, the heat map, the setup is already for the long. This is the dip. That's where you add to the long, and then you can chill now looking for the $3. We're gonna use the 90 measure trail.
Yeah, yeah. This is it. I mean, just beautiful, you know. And you just kind of sit back and relax. This is your strategy.
Exactly.
I really, I mean, it's really great that you've added the quantitative data in there now, Joseph. So in addition to your setup that you know and you've traded for years, now you have quantitative data telling you that 80% of the time or whatever percent of the time with these specifications, this stock closes above the open or whatever it might be. That's
Exactly.
and now that's an easy one because it's quantitative data. All right, I got a percentage, I got a number. I just go with it. You just have to find out where to get in and where to take profits.
Exactly.
Yeah,
It's part of the strategy,
yeah,
having stats, then having the chart pattern, and then having the order flow for the timing. And of course, this implies also, when I say strategy, risk management, self-control, discipline, and everything. Okay, it's everything together. It's like a puzzle. So for me to take a trade, like over here on Peggy, is because I have everything under control, everything respecting my risk, respecting my plan, respecting my process, respecting my strategy. And then when I see this, I just have to execute. Very, very easy. That's a long setup. That's a super easy trade this over here. And yesterday, as I said, we had ARC, SNTI, TOPS, same exact process. So some very good volatility this October in the small cap land. I really liked it. I know today we had Apple mover, we had Twitter mover, we had Tesla big mover. I mean, but these setups over here are pretty good. A lot of these stocks move like 100% on a small cap land the last few days. So very, very good.
So Joseph, based on our discussion here and this live trade here with Peggy, so you would be getting in somewhere around I don't know 276 or something like that. Is that right?
First, this because the setup that we had at
Ah,
260,
right. Previous setup. Yeah.
exactly. So exactly over here on the V pattern,
Mm-hmm.
over here, V pattern, soak on the main heat map over here, the support. This is a perfect soak over here, exactly this dip. But right away on the reclaim 265, that's where it trigger. At 265, I see over here my error coming in, and I see over here the price pushing. So I see the volume over here, the buyers. And then I see over here the candle. You can see Bruce is making like an engulfing over here. So this is an outside bar of this one. So this 265, 266, exactly here. This is my point. But then I set my stop. What I'm looking is for an ad. And I'll start looking, okay, where we have now a good heat map that can give me a very low risk. That's a defined risk over here.
Mm.
That's a defined risk 274. You can see we have absorption 1, 2, 3, 4, 5 times. And exactly when I start seeing the push, 276, 277, I am adding. I'm not adding far because if things don't go good, I'm going to use the 272 as my trailing. So I would say the nearer the support, the lower the risk.
Right. Now, how would you, if you can go through managing this position?
So this is the first entry level. I like to take always a partial, on the first push. So when I start seeing some stalling over here, and then I set my stop to break even or use this low. And then of course over here, when we add what I'm looking, this is a nice peak. I'm taking another partial. So now what I'm going to use, I'm going to use this 273, 272 because that's the main supporter before. So that level over here, exactly this point, that's my trailing for the entire position. I let this stock to work for me. I look at also the 5-minute chart, and we can see we're in a clear uptrend. There's no point over here to exit the entire position.
Yeah. Okay, so overall stop now has been moved up to 272.
Exactly. Why? Because sometimes what happens, Bruce, we have like, fake breakdown of the heat map they do on purpose, and then right away they reclaim. So I don't
Yep.
want to, get out, get in again. I risk generally for $2 stocks, 2 cents more.
This is where it becomes like I think for a lot of traders like a kind of a slippery slope. Um, Now you've this is complex trade management. You've got multiple positions, multiple areas, uh, and scaling in and scaling out. Uh, so um, how do you? I mean, basically, what you're doing is you took some off, you got back in, you took some off, and now your stop at your stop. What would be? You would still be. It's not just an overall break even, right? Or is it? You're still in
No,
profit.
no, you'll still be in profit because if you enter here like your position, you scale out partial, you re-add. So you have an average between this 276 and this 275, 265. So you'll be around 269, 270 over here.
Okay.
The point is always to be in the money when you trail. Never get a good win into a loss.
Right. So, yeah, yeah. There's just so many different ways to manage this complex entry exit, or all the partials and scaling that you've done. And then how do you, when you first probably started to work your strategy, you were probably all in, all out. Maybe you had a little bit of a trailer, or one looking for your runner. Now, when you get more, and then that built your confidence, I would imagine. Tell me if it's different. But something along those lines, and you're building your confidence, you're building your strategy, and then now you get a feel for trade management on how to scale in and scale out, but also not take a loss on the
Yeah,
overall.
yeah.
I don't know if you can elaborate on that. It just sounds like an interview. I'm sorry, Joseph. This room is for trading, and going through, but we are covering, like, your trade management, and I think,
Well, I think this is, important for the risk, so that traders understand
yeah.
uh, which trades to take, and also how to, proper trail or manage a trade. So the main point for me is lowering always my, actually improving the risk reward ratio. That's the first thing. So I'm not really looking at this point because I know what is my win rate. I'm not really looking at this point to improve the win rate, but I'm looking more to have big R return. And this comes only if you can manage tight stop losses, so having a low risk, and of course looking for multiple R return per trade. If you do that, you have the secret to make money. This of course means you have to have self-discipline, self-control in your trades and everything. So respecting your stop and respecting your trailing.
But
But if you can time your entries the best, find the perfect levels to trade. For example, I don't want to ever trade long over here on breakouts. I'm not entering these points over here. Where I'm entering will be levels over here or levels over here long, where I have a very low risk and a possibility of having a major win for multiple hour return. The same thing this morning when we were trading HUSA, and we alerted this at 465 exactly, and you can see over here Bruce in this heat map over here, right? So I alerted this trade exactly here, 465. The risk was 470, so we're risking 5 cents. The first main target is 427. So we're having 30 cents return for 5 cents risk. We're looking for 6R average of return of this trade. If I had, for example, my entry 465, but then the risk is like 495. In that case, we have 30 cents risk, 30 cents target. It's going to be 1R, and I'm not going to accept a trade like that. So knowing where to enter, knowing where to stop, using the timing over here of Bookmap, trailing correctly, respecting my targets, that's part of the plan, process, discipline, self-control. Having multiple return, how you build your account. Trade like this easily, like for 5K profit in a morning is very, very easy to do because you're risking very small and you have like very, very good return. So, and what I like about this is the fact that we had over here, I'm gonna go like this. We had over here that fake out that I told you before. Often, when we take a position, I want to see that fake out and then I short it. Because they will do on purpose to go break the 470. They fake it out. You can see over here, liquidity comes back. That's where I load the boat over here, this area here.
Now, this morning we didn't have like that much liquidity over here to take like 15, 20,000 shares. But taking between 5, 10,000 shares is still possible. And you take a very good unwind.
Yeah, yeah. I guess like where I'm getting at is so and I'm kind of digging into the details here in this webinar in this discussion.
Of course.
Now, but what you're doing now is how can you call what you're doing is disciplined with the scaling in and scaling out? Unless it
Because you have a bigger plan, because you know exactly what your average has to be and exactly where is your risk. So you're trying to, I would say, minimize the risk, maximize the return. And over here, this stock in particular was not scaling in, scaling out. But if, for example, you scale in, you have to scale in into precise. They were having a clear risk for your average, knowing how much you're going to be down for your average. That's very important. I'm not a big fan of scaling in.
hmm,
I prefer, like, 1, 2 trades, bigger size, and finding the correct entry.
okay, okay. I just think a lot of traders, and why I'm asking, I mean, you know, over over time you get a feel for it, and what I'm gathering is your answer is I've done this enough times. I know how to manage my risk. I've already taken my partial profits. I'm not going to take a loss on the overall.
Absolutely, absolutely.
But there's not
Is yeah,
it's not really like a kind of like a written out plan. You're just kind of like, this looks kind of good enough. I'll take my profit here, or I have my reasons for it. Below the heat map, a couple of cents. But that's about it, right?
exactly. I mean, you know already because you traded this like 1,000 times, or you back tested like 1,000 times, or more than 1,000 times. So you know what it's going to do, or you have stats by your side. So of course, I'm gonna respect the plan because I know that this paid me in the last, 15 years, 20 years, 5 years, 1 year that I traded.
Right,
So that
right,
is confidence and that is conviction.
right. Okay, that's where I think a lot of traders can get in trouble, because maybe, I'm building my confidence, and then maybe I take a step too a big step too quickly, and it's like, I'm going to scale in and out, and then I don't know how to manage my position.
Absolutely. It's something that you have to start doing with very, very small size when you scale in and scale out, and learn how to do it. If you want to, do that, then that means essentially trading around a core. So scaling in and scaling out the position. Uh, Start doing this very, very small, even with, for a $5 stock with 50 shares in order to learn how to do it.
Uh-huh.
And recycling is something that you will learn with time. Doesn't mean that, to be a good trader, you need to know that, because you can simply short or long one position, exit, that's it. But, if you want to work in this sense, it just takes a little bit of time to master this. So give yourself patience. Traders think that in 3 months they will learn how to trade, or 1 year they will learn how to trade. Traders have to learn that it takes, at least a couple of years to learn how to trade. So when somebody comes to me and say, "Oh, you know what? I know how to trade. I'm a professional trader." How long have you been trading? 2 years, 3 years. You're not a professional trader. You're still a beginner. So for me, everybody that didn't do at least 3, 4, 5 years trading is still a beginner.
Hmm. Yeah, yeah. I mean, very valuable stuff, Joseph. Thank you.
Thank you, Bruce. So let's continue to look our Peggy. All right. So Peggy, you see over here, sweep. So remember, trader, where we're saying risking the 272. You can see over here the break of the J lines at 270. That's the level we are marking, 272. That's the main fail over here. That's where seller jump in. Let's zoom in. Yeah. So that's the point of what we were saying with Bruce just now, the risk management. If you are long and we're trading over here the dips, and then we're looking for that main push, the upside, of course you have to know if things don't go, uh, with our plan, where to trail. And this is still a win. This is still like a trail in the money. So we're getting out over here in the money.
Yeah. Yeah, great. I mean, there it is, demoed right in front of us.
Exactly. This is what we were saying, trail at 272.
Yeah, beautiful.
So right now, we'll look to trade this short nor long. We'll simply avoid, look at something else. For example, we have the sideways action on KITT, which is just like grinding over here. So right now it's after 10 o'clock, above the open level. We'll be looking only for two main levels over here, which would be the pre-market high major clear out, or the 640 major clear out over here, which is the high of the day. So those are the two levels that I'd be watching. Otherwise, for me, this is a no trade. Waiting over here. Not also that high volume that I wanted to see. This is a 5-minute chart with 500K average, so that's not much. All right, Bruce, 11:30 over here. We have any questions?
No, not really. I think we covered everything. And I've put your contact information into the chat here a few times. So if anyone's interested in this kind of discipline and trading a style, you guys can reach out to Joseph and uh, go through some of the mentorship that he's talked about. No, really great stuff. And I'm sorry to take a lot of the discussion time here. With
Oh, I think we had a very good like discussion today. I really liked it, and we covered like some very good stuff. So for me, that was very important to explain traders how to have the risk management. So perfect over here. This is an example on this one, for example, Bruce of risk management. This is a Twitter short. We're looking for that unwind. The trade doesn't work. We cut it. And then over here we trade a second time. But you see over here, for example, this is a trader that I'm following mentor. So you can see this risk management. He's not staying in, against this position. He's using right away the risk out. Boom. Doesn't work because, you have like in this case an opposite direction, a trader not following. Okay, that's the reason to stop. That's what we're talking about, form risk management with good examples, retrading, practice, analyzing your trades, having a mentor, because all this, a lot of these trades, they can unwind big, when we have the correct entry, or that day is the stock will simply unwind. Like yesterday, Amazon was a big runner for us in the room, but today, for example, over here we didn't have the trade get pop up of news with Elon Musk. Good reason over here to trail. So that's what is most important. More than a 10K win or whatever. It's sharing the risk management over here in play.
yeah, yeah, makes this is the like you said, it's like the other element of trading, and what you said earlier is the most important element that most traders understand entries and the strategies and order flow and all these different things, but they just can't kind of wrap their head around the trade management and the how to handle some of these scenarios with losses or whatever it might be.
Exactly. Exactly, buddy.
Yeah, yeah, really, really great. There was a question here, Joseph, about uh, is dilution a factor in PEGI?
Uh, okay, the point is, a lot of people, uh, I look at dilution, realize that the software we take dilution to play as a trade, but dilution is a double sword edge because everybody right now is thinking, oh, there's dilution, let me short it right away. And then they squeeze for 2, 3 days until the big hands are not satisfied. Market is very manipulated. So knowing that right now we have this information that everybody can have access to, and knowing that there is dilution is not really a big component for shorting, for a reason to short the stock. Okay, the point over here instead is looking more at price action or the flow. If you look on dilution, it will tell you, oh, there's dilution. There are warrants at 4. Or let's say we have like 55 million shelf and 1 month left of cash, but they're maybe still on day one. If big hands have the opportunity, the volume, the shorts to squeeze, what they're gonna do, boom, they're gonna try to push this all the way up as much as they can. So they use the fact that early short sellers, crowd will be stuck. They will do whatever they want. Once you stop loss, your account gone, boom, they're gonna really like dump any of their offering. Okay, so that is what the market is doing right now.
Wow, that's great. Um, yeah, yeah, that's a really, really good question and a really good answer there. Um, okay, well, let's see. One more question from Kishore. Um, oh, those are Jtrader's J lines there. It's kind of moving averages plus some extra stuff in there that he looks at. It's is his proprietary way of looking at things. All right. So we're going to leave it at that, Kishore, because you can reach out to Jtrader. You've got his contact information in the chat there. All right. Well, uh, I guess next time we talk to you, Joseph, you'll be back in San Marino.
Yep, in Italy. Finally, I can have some good food.
Ouch! Ouch! That hurt. Oh, uh,
You were in Italy 3 years. Come on, you know that the food is much better.
yeah, yeah. I'm not gonna debate that. Um,
All right. So, Bruce, it was a very good discussion today. I really liked it. Let's do this again next week. Thank you, traders, for attending us with us today. Hope that it was useful talking about risk management, about controlling your trades. We share also some examples that we traded this morning. So thank you again. See you Bookmap next week and take care. Bye bye.